What's going on, guys? Welcome back to the channel. My name is Matt, and in today's video we're going to go into information about Housing Minister Sean Fraser's new strategy and what this means for you and the market. And then we're also going to talk a little bit about tomorrow's potential rate cut, which is on the table. We're getting the announcement from the Bank of Canada. So we'll talk a little bit about that towards the end of the video. So here's the deal. The federal government, led by Housing Minister Sean Fraser, has rolled out a new strategy. But here's the twist. Okay, it's not about lowering home prices at all. Instead, it focuses on increasing housing supply. Why this approach? Fraser believes that simply trying to bring down housing prices isn't the answer to the affordability issue that we're all seeing in the country. The real issue is supply. By boosting the number of homes available, the government aims to make housing more accessible and meet the growing demand, especially in high demand areas. One of the key components of this strategy is to work closely with the municipalities and the provinces. The plan includes incentives for cities to speed up approval processes for new housing projects and support for building affordable housing. The housing minister also mentioned that government will provide funding to create more rental housing. This is crucial because not everyone is looking to buy a home right now, especially with the current market conditions. The housing minister's stance is that by increasing the supply, the market will naturally adjust over time, leading to more stable prices. Now, what does this mean for you? If you're a potential home buyer, this could mean more options in the future. For current homeowners and investors, might mean a bit of a more balanced market down the road. Now, in my personal opinion, I think adding more supply will definitely help the market. Do I expect them to add enough supply to stabilize pricing or bring pricing down? No. The targets they have for building new homes in Canada is extremely high, and I think we're nowhere near even a fraction of it right now. So to see them actually hit those numbers, I think is very unlikely. I think the government has this big, elaborate plan to increase housing supply, but I don't think it's going to be possible unless some miraculous thing happens in the future. I think it's a step in the right direction, but I think it's going to take a lot more than just that to make housing affordable. And we also want to talk about why markets are really buzzing and why everyone's really speculating about the potential cut from the Bank of Canada tomorrow. This topic is definitely crucial for anyone involved in mortgage and real estate markets, as well as for those people who just want to keep on top of what's happening in the Canadian economy. First, let's talk about the economic indicators, right? So we've been seeing some concerning trends lately that are worth discussing. So first, we have GDP growth. GDP growth has been sluggish, showing signs that the economy is cooling off. Okay, this is a trend that we've been seeing and observing over several quarters now. The slow GDP growth suggests that businesses and consumers are becoming more cautious with their spending. When businesses and people cut back, it leads to a cycle of reduced economic activity. While inflation is still above the bank's target, recent data suggests it's beginning to slow down. On one hand, lower inflation can relieve some of the pressures on people's wallets. But on the other hand, if it slows too much, it can signal that the economy is weakening more than anticipated. And we also have employment numbers. So the job market isn't as strong as it used to be. Recent employment figures show a decline in job creation, which is a worrying sign. When fewer jobs are being created, it can lead to higher unemployment numbers and lower consumer confidence. People without jobs or those fearing job losses tend to spend less, further slowing down the economy. Next up, let's talk about the global environment. So we're not obviously isolated. Canada is connected to the rest of the world. So we have to see what's happening in other places around the world. The U.S. Federal Reserve, their recent moves to pause hikes are influencing expectations here. Okay, so the U.S. economy is a significant driver of global financial markets, and their policy decisions have ripple effects all across the world. So the U.S. Fed pausing their rate hikes suggests that they are concerned about their economic growth, which can impact Canadian markets through trade and investment channels that we have directly. We have to look at global trade. Ongoing uncertainties in global trade, particularly with our key partners, are also a factor. So these are things like trade tensions, tariffs, supply chain disruptions that have all kind of contributed to the economic uncertainty that we're seeing. And so let's look at what markets are saying about the potential cut tomorrow. Okay, so market sentiment is definitely a good indicator and predictor of what central banks can do. Traders are betting on a rate cut tomorrow. Futures markets are pricing in higher probability that the Bank of Canada will cut rates. In fact, I believe now around a 90% probability that there's going to be a cut tomorrow. This betting behavior is based on their analysis of the economic data and their interpretation of what the bank's likely response is to the current conditions. It's also good that we look at the bond yields, right? So the 5-year Canada bond yields, which have been dropping, and they influence the fixed rates, which usually signals that investors expect lower interest rates in the near future. When bond yields fall, it often indicates that investors are seeking safer, longer-term investments due to expectations of economic slowdown and potential rate cuts. So let's look at what happens if the Bank of Canada does cut rates tomorrow. Obviously, it impacts borrowing costs. We know that. Lowering rates means cheaper borrowing for businesses, consumers. This helps stimulate the economy, helps increase spending and investment, which is what the Bank of Canada aims to achieve with the rate cut. Cheaper borrowing costs can also encourage businesses to expand and consumers to make big purchases like homes and cars. It definitely affects mortgage rates directly. It'll affect variable rate mortgages, and this is a big one for people in the real estate and mortgage industry. A rate cut could lead to lower mortgage rates, making it more affordable for home buyers. Again, will be a small increase or a small stepping stone, but a step in the right direction. Lower mortgage rates will definitely increase demand for housing, but again, will it be enough to see any significant changes in the market? We don't know yet. But for existing homeowners, it'll definitely help with their monthly payments. Now, what about confidence in the economy? So a rate cut could also help boost consumer confidence. When people feel that the central bank is taking action to support the country, they may feel a little bit more optimistic about their financial future and more willing to spend. And also investment markets. So equity markets often react positively to rate cuts as well. So as they make borrowing cheaper for companies, this can lead to higher corporate profits. The bond market might react a little bit differently, as lower rates can reduce returns on fixed income. So to wrap everything up, okay, from the housing strategy from Housing Minister Fraser to now the cut tomorrow, nothing is certain. There are definitely strong signals pointing towards a potential cut by the Bank of Canada tomorrow. The decision will have implications around the country, affecting everything from borrowing to consumer confidence. I will definitely keep you updated on this information. So if you guys enjoyed the video, please subscribe. And if you liked the video, liking the video helps me push this video to new audience that might really benefit from the information. But until the next one, take care.